Last week, when we had earnings on the banks, I told everyone, you're going to see those who are called, or in a category being called, fear of missing out, they're going to get hurt. And boy, did they. Check this out. And same with gold. But first, let's do the banks. When they came out and had the big earnings on Tuesday, I told my members, do not go after these bank stocks. We caught the bank stocks on the other side. And look what happened to these bank stocks. All these people who always are fearful of missing out, these are the people who always lose money. Okay, look what's happened to them. Look how these banks have pulled way back, okay? And Goldman Sachs, look, Goldman Sachs right now is ready to go short. It turned red on our color-coded chart. Look at that. Citi, look at this. It's turned red. It's telling we got more sellers than buyers. But last week when the earnings came out, they're just all going crazy. Oh, these banks are terrific and they're doing well, and when they're not. Now, let's talk about gold. Also, I said, starting 2 weeks ago to my members, this about gold. When the banks came out last week and started recommending gold and said the price is going to go much higher, that's when you know you start taking profits. Exactly when you take profits, because it's going to go the other way. And I've been telling you we're going to get a 5% pullback, 5 to 7%. But with the banks confirming gold going much higher, that's when you start doing the opposite of everybody else. You start selling. That's right, exactly what I said. The minute those banks came out, they were pushing gold, man, take profits. Now, but understand this. If you look at your gold, especially our miners, which we're up big time, we've been taking profits, but it's not time to worry, not time to dump all your shares. Take some shares off, put your stops in, not until, if you take a look at this stochastic right here, you've got to have a crossover. Until you have a crossover, it can go make a new high. Let me show you what I mean by a crossover right here. This is a crossover, typical crossover. See it right there? That red line's going through 80%, and then it goes through the white dotted line. We don't have that. Here's another crossover right here, another example of a crossover on a stochastic. Went through the red line, okay, and then it went through 80%, then went through 60%. We're not seeing that right now. So what I'm telling you, last week, take our profits. I knew this was going to pull back, but again, don't get out totally, because this can rally and make new highs. If it's not going to, when they turn red, then we'll start selling short, okay? Now, the other thing I've been talking about, too, is margin debt. Everybody keeps asking, when is this market going to correct or crash? Well, let me show you what is called leverage. Leverage to money supply. Remember, money supply is being pushed into banks. They're being pushed into the CEOs that keep doing stock buybacks, to keep pushing up their tech stocks. We know that, okay? But also remember, there's another place that money goes. Wall Street, to the margin accounts. Wall Street's putting money in these margin accounts, fatten them up, so that the tourist investor who doesn't know what they're doing will continue to buy all these stocks that are being sold, especially the very, very good tech stocks that the institutions are dumping. All the tourists, the FOMOs as we call them, are going to jump in, use that leverage, and they're going to buy. And that's why we're not seeing the S&P drop. So here's the proof. Leverage versus money supply. Look what happened in 2000. The same thing that's happening now. All this money supply, and let me show you this right here. Here's your increased money supply. Look at this chart. This is the S&P right here. Look how the money supply increases the stock market, because the money supply goes to the CEOs. The CEOs do stock buybacks, and they keep pushing up the stocks. And as I said, the other thing with money supply, it supports the margin debt. Wall Street pumps those margin accounts up so that their clients will just continue to borrow and keep buying the stocks that are being dumped by, again, the big institutions. So the banks, all the people, again, the reason why 80 to 90% of retail investors lose money is because they buy right at the top, fear of missing out. And this leverage is very, very serious, very serious. So if we had a crash because of the leverage in 2000, we had a crash in 2007, why are we going to be so lucky we're not going to have one now? Now, this is different. There's no question about it. It's going to be tough because Trump does not want this market to go down. He did the same thing in his first term. He kept pushing the market higher and higher and higher and higher because he equates, and all Wall Street's done this, they've taken parking space in everyone's head that when the stock market's going up, it means the economy's doing well. President Trump, he really believes it. He believes that he's going to be judged on the stock market. So as long as we can keep leveraging, as long as they can keep increasing the money supply, we just got to look for the signals that when it breaks and get ready for a short, and it will happen. It will happen. So again, right now the banks are not doing well. We could see that. The banks are just doing terribly. And the tech stocks, remember, everybody, where the money is going in the tech stocks, and people don't realize this, is in the semiconductors. It's the semiconductors. That's where most of the money's going. If you look at TSM, you see TSM, or if you look at Micron Technology, or you look at Intel, these are stocks that are ready to break out. That's where most of the money's going, right there. Here's another breakout pattern right there. So most of the money's going in here, into the semiconductors. Now, a lot of money then transfers into the chip providers like NVIDIA, okay, and AMD, okay, and Intel. And remember, Taiwan Semi sells a lot of chips to NVIDIA and to Apple. So, and the cloud providers like Microsoft and Google, okay, this is where money's going. So as long as you keep following your semiconductors, follow your chip providers, you follow your cloud providers, and even your infrastructure support stocks, that's where the money's going until it stops. And when will it stop? When the leverage versus money supply, which I showed you, turns around and stops. That's exactly when the market will correct. It could be, it could be quite a ways off if Trump keeps on pushing in that money supply. Remember, the way the money supply works is the Federal Reserve goes to the banks, buys from the banks their assets, like T-notes, their treasuries, mortgage-backed securities. Now the banks got a lot of money. Then they're instructed to take little of that money and give it to small businesses. Take little of that money and give it to mortgages. Take the majority of the money and give it to the CEOs of tech companies to keep buying their own shares back. This is what they do over and over and over. Now, so we're at a peak leverage right now. And again, when you look at and again, you can see this is what's pushing the market up. I'll show you one more time. Look at this. This is the money supply. This is what's pushing your stock market up. Now, there's another thing that's going on that they don't want you to know about. People are really fearful. Look at this. Job openings versus the S&P. Are you nuts? Look how job openings are tanking while they're pushing the S&P up. So what they do is they tell you when the S&P is going up, they tell you how wonderful things are, how everything's great. And it's not. But that's what they'll tell you. So that's why you got to watch your job openings to the S&P. And look, it's terrible. So I hope this helps you out. And again, we've been since 1998 teaching people how to trade, understand the market. And we'd love to help you out too. Just go to philsgang.com. First 10 days is free, and we'll help you. And the big thing, you got to learn how to sell short. So that day comes, the market crashes, you're not just sitting there getting slaughtered in your 401k. You have a leverage so you can sell short, and we'll help you. See you on the charts, philsgang.com.